Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Red across the board, gold at $1,552, down $3.30. Silver, $17.88, down 19 cents. What is going on? Why are precious metals in the red zone? What is going on? This is going to be the topic of this video. Gold and silver prices back down as risk aversion recedes. So things are starting to calm down in the economy. People are starting to get a little at ease, and this is definitely going to be affecting precious metals prices. To what extent? That's also what we'll be discussing in this video. So before we start, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. Hopefully you guys will enjoy this because it is interesting and it's very informational. So let's jump into it. Gold and silver prices are lower in early U.S. futures trading Thursday, as risk appetite has quickly returned to the global marketplace on ideas. The U.S. and Iran have stepped back from the brink of an escalating military conflict that had been brewing for months. So they're saying that things might be calming down between U.S. and Iran, which is definitely going to put people at a more comfortable spot. Statements coming from the U.S. and Iran strongly suggest the past 24 hours, including President Trump saying Iran is standing down. February gold futures were last down $6.30 an ounce at $1,553. March COMEX silver price were last down 18 cents at $17.98 an ounce. Most market watchers don't at all expect the U.S. and Iran to become friendly, but more likely is Iran's clandestine operation against the U.S. that have been carried on by Iran as it proxies for years. Meantime, the U.S. will continue to put the screws to Iran by harsh economic sanctions and working to prevent the nation from developing a nuclear weapon. Talk about that. Wow. So global stock markets rallied Thursday. U.S. stock indexes are pointed toward firmer openings and at record highs when the New York Day session begins, which is also going to affect precious metals prices. NYMEX crude oil prices have came down from a spike high and trading around $59.75 a barrel. So stock markets are definitely something that you need to stay up to date with, even if you don't agree, even if you aren't into stocks. You still can see where precious metals prices are, because usually you will not see stocks and precious metals rising at the same time. It's usually that polar opposite. Anyways, traders and investors are getting back to examining economic data and other market fundamentals, including awaiting Friday morning's December U.S. employment situation report from the Labor Department. Wednesday's stronger than expected ADP National Employment Report has some leaning toward a stronger non-farm job numbers on Friday's report, which has been the forecast to come in at 160,000. Global stock markets were also buoyed by Thursday's report on China, as it confirmed will sign a Phase 1 trade deal with the U.S. next week, which is also going to affect precious metals prices. You know that U.S.-China trade negotiations have been one of the front burner influencers on precious metals, either rising or falling. And right now, as we see the Phase 1 trade deal, the partial agreement going through, this is going to put people at ease. So right now, the whole point of this, though, is just because it's happening and precious metals are lowering right now does not mean that it's going to keep falling lower. These things blow over quickly, and it can escalate at the snap of a finger. So don't just believe that things are settling down and it's going to stay settled, because you know how fast things can flip the switch and how things can escalate very, very, very suddenly, which could easily escalate prices again. So, a partial trade deal between the two largest economies should work to boost global economic growth in 2020. In overnight news, the Eurozone's jobless rate reported at 7.5% in November, unchanged from October and in line with market expectations. Inflation in China picked up and hit an 8-year high at 2.9% in 2019. The main culprit was rising pork prices due to major disease decimating China's hog herd. The Global Council has reported world central banks bought a net 41.8 metric tons of gold in October. That was 16% lower than in September and 29% below August. However, analysts believe the gold purchase pace from the central banks will pick up in 2020, which they need to. And it's going to be interesting if they don't, or even if they do, it's definitely interesting to see where supply and demand falls into and how much it can affect prices. Best beware. And this is a, FYI, silver shortage is a real thing. Miners have been abandoning silver mines, and this is something that they cannot catch up. They can't just buy this because silver is hard to dig out of the ground. So there's going to be a lot of manpower needed, and also a lot of silver mines are becoming abandoned, and they're finding by bypassing. So that's going to be an interesting thing, very interesting thing to stay up to date with, but I will keep you guys up to date with it. So anyways, U.S. economic data due released Thursday includes the weekly jobless claims report and the monthly chain store sales index. Several Federal Reserve officials are also slated to give speeches Thursday. So this is going to definitely affect, people are probably waiting for this to go through, because anytime the Federal Reserve makes a statement, it can easily be screwed or misscrewed, and people perceive it differently, and it is speculative. These markets are becoming more speculative, which could then, in return, affect the way people invest their money. So, technically, the gold bulls have firm overall near-term technical advantage, but have faded this week. A price uptrend is still in place on the daily bar chart. Bulls' next upside price objective is to produce a close in February futures above solid resistance at $1,590 an ounce. Bears' next near-term downside price objective is pushing futures prices below solid technical support at $1,530. First resistance is seen at the overnight's high of $1,562, then at September's high of $1,571. First support is seen at $1,550, and then overnight's low of $1,541. So now we see March silver futures bulls still have the overall near-term technical advantage, but a 4-week-old price uptrend line is now in jeopardy. Silver bulls' next upside price breakout objective is closing prices above solid technical resistance at this week's high of $18.89 an ounce. The next downside price breakout objective for bears is closing prices above $17.50, so we need it to stay above that level. The first resistance is seen at today's high of $18.22 and then at $18.55. So, right now, we definitely see things in jeopardy, like it says, but I do want to reflect and revert back to the main context of this article, is even though prices are lower, these things do not blow by easily, and it's definitely something that is still very tense. Just because President Trump says that Iran is standing down, it doesn't mean that they will stand down, or that things won't escalate, or that the partial trade agreement from U.S. and China couldn't get in some type of disagreement again. And with stock markets, they're volatile. There's high volatility in stock markets. So just because they're up right now does not mean that they won't go back down, and actually they are later into the trading day. They are actually going back down. So who knows what's going to happen. I do want to read some of the side tweets that Kitco put. So gold, silver lower on U.S.-Iran military stand down, rallying global equities. So Perth Mint's gold coin sales surged in 2019 while the U.S. Mint sees worst year on record. So First Quantum will produce more nickel and little less copper. 1,600 gold slips away, but just for now. So Kirkland Lake Gold increases productions 21% in Q4. So I wanted to share that with you guys because some of that stuff is interesting. But just to reflect back to this, I know a lot of people are very, very emotionally attached to these markets. But when things are escalating or de-escalating, do not put that into perspective as it's a for sure thing and that it's going to keep going lower. I do not want people to start panic selling thinking that silver is going to drop down to $14 an ounce, because that's unrealistic. If you are looking to sell, I highly recommend waiting, just waiting for this stuff to blow over. It could go down a little more as things de-escalate, but it also has just as much opportunity to go back up. And with if you've been in these markets for even a couple of months, you know that it goes up and it goes down, and that's natural and that's healthy for a market. That's how stability gets built. That's how foundations get built as well. Look when stock markets were setting record highs and silver was still holding its positions in the market. That shows that there is stability there, that there is real value, and people are willing to wait it out. So anyways, I'm going to wrap this video up here. I hope you guys did enjoy this video. If you did, make sure to smash that like button. Make sure you subscribe if you're new because I do post daily videos. Thanks for tuning in. Link to this article will be in the description if you want to check it out yourself as well. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.